Hello, my name is John Troncoso with the Troncoso Group of Jaffe, Tilchin, and I'm here to talk to you a little bit about the markets, your portfolio, and the election. So the election is over. All but the smallest parts of the House of Representatives have largely been accounted for, and it's a Republican sweep of the presidency, Senate, and very likely Congress, the House of Representatives. So the first question I'm getting from folks is, what steps should we be taking now that we know how the election outcomes have resulted? You know, by and large, we put so much weight into these elections, and indeed, it does impact our day-to-day life, and I think that's very true. There's certainly a human capital element here, but by and large, the markets do not care if it's a Republican, an independent, or a Democrat in any of these seats of office. The markets continue to march higher. That's because folks like Jamie Dimon, Warren Buffett, they will keep building regardless of who's in office. They will keep trying to maximize shareholder value and enrich themselves however they can. And that's why capitalism, to a large degree, is fairly agnostic as to who's in political office. So what should you be doing? Continue to have a plan. Continue to make sure you do not have too much risk or too little risk, and own the best companies that America has to offer. Companies like NVIDIA, Amazon, Apple, they will do well regardless of who's in office. You still need an iPhone. You're still going to go get your coffee at Starbucks. So that's my advice, is continue to have a great portfolio. So the next question I'll probably get from folks is, if the market is so agnostic, why is it up so much? And the answer is quite simple. The markets do not like uncertainty, and I think such a decisive victory by one party or the other would have answered a lot of questions and squashed a lot of doubts. So the market is largely up because we have a decisive victory. And broadly speaking, I think Trump will likely be deregulatory in nature and probably reduce taxes. That's kind of the playbook from his last presidency. So I think that the markets generally like those sort of things. The next question, should I sell? The answer is a resounding no. Like I said, the market is extraordinarily agnostic. And over the last couple of decades, we've had a very left and right presidency. We've had folks, a lot of folks said when Obama was elected, we have to sell everything and get into cash because he's going to ruin our country, ruin the economy. That tended to be not true. The economy, the markets prevailed, and they were up quite a bit. We had Trump. Everybody had a lot of folks saying, hey, Trump's in office, we have to sell everything, we have to start over, we have to get defensive, and that tended to not be true. Biden again, market at all-time highs. So again, we're kind of getting this lesson that the market does not care about left or right, Republican or Democrat. It will continue to grow. And I think the best comment is that the market is very resilient when it constantly finds ways to reach all-time highs. So you should not be selling. You should not be going to cash. If you want to, on the margin, change your portfolio to get a little bit more conservative because we've had such a great run over the last couple of years, sure. But we're talking a couple percentage points. We're not talking 100% cash. The markets in your portfolio are not like a light switch that you should turn on and off. You should be dedicated to a range of equity exposure. Somebody that's moderate might be 40 to 80% equities. If you want to be a little bit towards the lower end of that spectrum, that's totally fine. So the next question is, hey, I've made a mistake. I have been very conservative because of the elections. I was very nervous. I've been sitting in cash for a great degree. What should I do now? To me, by and large, the answer is always have a financial plan, invest accordingly, and vary it as little as possible thereafter. I'm not saying don't revisit your financial plan. I'm just saying don't treat your investment account like a trip to Las Vegas. Stay in those ranges of acceptable outcomes, have it be data-driven, and you should come out just fine. If you have cash, figure out a plan of how to get it invested. Don't delay too much. The fourth quarter is generally the strongest quarter of the year. And generally, again, not a comment on the left or the right, Republicans or Democrats, but generally after elections, the markets tend to go up. And that's because everybody's very excited about new policies, about a new outlook. No matter who the president is, that's been the case. So get your investments deployed. Maybe use some dollar cost averaging to fortify against these really quick up and downs in the market. The final elephant in the room, now that the election is maybe left through our front door, is the Federal Reserve. So by and large, the Federal Reserve is going to be going in a rate cutting environment. They cut by 50 points 2 meetings ago, and they just cut by 50 points this week. 25 points this week. And I think by and large, we knew this was coming. They probably will have one more quarter point cut in December. I think this is the right action. I think the economy has stayed strong, but not too strong. Inflation's quickly come down. So I think the Federal Reserve is on the right path. And I think that if anything, that should be pretty stimulative for the economy. So it'll be raising the earnings of lots of companies in America. Because the way I look at it is, after having hiked so many times during the last few years at unprecedented rates, and tying the arms behind corporate America. The IPO market was dead. Car financing, mortgage applications were all down. Businesses were not investing in capital expenditures. So as rates normalize, and I'm talking a new normal, not, I know 1970, 1980 rates were 15+%. I'm saying the new normal, what we've become accustomed to over the last 10 or 12 years. As the Federal Reserve rate approaches those levels, I suspect that those two arms that have been tied behind the backs of corporate America will actually start to be untied. So if these couple cuts here early, maybe is one arm being tied from behind their back. When the second arm is untied, I think the markets will do quite well. I think that we are going to have a great couple of years ahead of us from a market's perspective. Earnings have been resilient. They have been strong. The economy and the markets at all-time highs. So stay invested. Keep disciplined to your plan, and invest early and often. One last comment. At the end of the day, we put a lot of dollars into these elections, and at the end of the day, nobody has a greater impact on your life than you. So work hard, stay disciplined, and things will work out. Thanks so much.